I will be sharing with you my personal views and opinions. These do not reflect necessarily those of my employer.
Good morning or good afternoon, depending where you are. Welcome to the International Law Institute COVID-19 webinar series. Today we have Jose Tadeo Martinez, who is gonna talk about moratorium and other mitigating measures in response to financial impact of COVID-19. Before we allow Tadeo to start talking to us, let me tell you a little bit about him. He's a senior consultant at the Inter-American Development Bank, and he has been with the bank since 2006, where he started as a legal consultant. He has been the lead counsel in many complex international operations in over 130 different projects in more than 20 countries in Latin America and the Caribbean. He specializes on areas of corporate finance, financial institutions, private equity, venture capital, corporate governance, contracts. Before he joined the Inter-American Development Bank, he was a professor at the Universidad Central de Venezuela. And also, he was in private practice as a solo practitioner, and as well as one of the major firms back in Venezuela. So, with no further delay, I will leave the floor to Tadeo. Tadeo, welcome to the series. The floor is yours.
Thank you, Carlos, and thanks to the audience. Just so for full disclosure to the audience, Carlos has been a friend of mine for a number of years. I appreciate the invitation. I also have a number of friends at the ILI and mentors that I appreciate and respect a lot. And I do think it's a very timely invitation to share with you a few thoughts and reflections on what the legislative responses have been to, by various countries to the COVID-19 pandemic. This all started a few weeks ago in a conversation that Carlos and I had about the crisis, and I mentioned to him that a moratorium would become a frequent topic of conversation, that it would start to have an impact on the performance and enforceability of contractual obligations worldwide. And given this, I innocently hinted to Carlos that this would probably be a topic of interest to the ILI audience, and that somehow became some sort of a self-invitation for me to do this presentation today. But I do appreciate it, putting fun aside. It's definitely a topic that will affect us all in different ways and at different times, but we should all become familiar with the entire idea of a moratorium and of mitigating measures vis-a-vis the crisis that we're all facing. As Carlos mentioned, I am an international counsel, and I focus on international financial transactions. And over the years, I've negotiated a number of agreements, and quite frankly, the vast majority of those, you would always find some reference to moratorium. There will be some language somewhere hidden towards the end of the agreement where if it is a financial transaction, the lender would say, should a moratorium occur or any other payment deferral enacted by order of a local authority, this in and of itself would constitute an event of default. And there is not a lot of negotiation going on around this type of language. It's fairly often overlooked because of the highly infrequent nature of these events. And many practitioners would also have some familiarity with these clauses and would naturally, I think, would tend to agree that the underlying purpose behind the language in agreements that describes moratorium as an event of termination of the agreement is related to the intention of the parties to protect the legitimate expectations they have out of the agreement and that are reflected in the terms of their bargain. This is particularly true in business-to-business transactions, and where the sophistication and the capacity of the parties to understand their rights and obligations is not into question. When it comes to business-to-consumer transactions, you may reach different conclusions. Yet, in the current environment and the situation that we're all facing, we are presented with a completely renewed vision of what moratorium is as a legislative tool to cope with the unforeseeable events of the emergency response to a pandemic, to a global pandemic, and to the response to the economic effects of the crisis that this has triggered. So with that, I will tell you my objectives for today's conversation are three main ideas. First, to offer you a primer of the different ways in which moratorium and other mitigating measures are being deployed by countries around the world. Second, somewhat to demystify moratorium and to remove some of the negative connotation that the term may have earned in certain industries, such as the financial industry, and to try to offer more objective basis to assess what a moratorium and regulation is trying to achieve and how it does so. And last but not the least, I think the most important message for today would be the fact that there are meaningful resources available in the public from reliable sources that are doing a tremendous amount of work in collecting and organizing data in a way that makes it user-friendly. Namely, development financial institutions are taking a lead in a way in organizing this information, and you can find extraordinary resources in their websites. You can visit the website of the World Bank Group, of my own employer, the Inter-American Development Bank Group, and other DFIs around the world. And you will find, if you search for COVID-19, resources that will offer you detailed descriptions on what each member country, and sometimes the reach exceeds even the member countries of the institutions, but what countries are doing and how those measures have been adopted, the chronology, the timing of the adoption of those different measures, and oftentimes you will find links to specific regulations so that you can consult them. Whether you are a government official or you work for the private sector, the reality is that we will be living and operating in an environment where some form of moratorium or mitigating measure will be in place. And we will be both benefiting and suffering the effects of those measures for the foreseeable future. So I would consider myself satisfied if I encourage you to research and to inform yourself about the various ways in which your government and other governments around the world are reacting to the crisis, including the private sector, and to get yourself acquainted with the resources that may be available to you, including technical assistance, in order to maximize the impact of our response, of our collective response, and to minimize the loss of both lives and livelihoods in the long run. And with that, let's move on to the facts that we know and that brought us here. We, as a collective, we have not witnessed a situation like COVID-19. No one has. And what started as a local health emergency rapidly became a global health emergency. We have all seen the news. We have massive amounts of information on what this pandemic is all about and what we can and cannot do. But I think it's somewhat summarized in a phrase that it's all too known to us, which is we need to flatten the curve. And that is very telling of the situation that we're at. We have a virus that is highly contagious. Even today, scientists are trying to figure out the different mechanisms of contagion of this disease. It will make some people severely ill, and the volume of infected people can grow so quickly that those requiring hospitalization and intensive care would easily surpass the installed capacities of countries, of states, and cities to provide healthcare for those in need, not just those victims of COVID-19, but simply people in need of healthcare. And that's how it becomes a very bad problem to have. So flattening the curve is the best that we can aspire in today's environment, given that there is no known treatment and there is no vaccine for this disease. So we try to slow down the disease, and the most effective measure that we have come up with is social distancing. And the different measures adopted to achieve consistent levels of social distancing have led to a depression in the demand, as well as an interruption in the supply or a disruption in the supply of certain goods and services. And these two combined features alone might be sufficient to explain the entire necessity for a moratorium and mitigating measures, but the reality is that these two features are only the tip of the iceberg. There is a chain reaction that is triggered as an immediate consequence of social distancing measures that is spreading throughout economies at different paces and with asymmetric impacts. And what I mean by that is economic sectors and geographic regions are not affected equally. We all know today that some people have managed to keep their jobs and continue earning their salaries by teleworking or by working in sectors of the economy that were considered critical, but many cannot earn their day's salary. Micro, small, and medium enterprises are likely to be hit the hardest by this crisis. The poor and the vulnerable populations around the world will also be exposed the most to the crisis and to the aftermath of the crisis. Access to credit will shrink dramatically, precisely for developing economies, which will only exacerbate the economic and social divide and their problems to overcome poverty. All the efforts made through the emergency response, which continue today, as we mentioned, have triggered an economic crisis that will continue to unfold in the months and years to come. And in order to cope with the consequences of such measures and of the economic crisis, governments around the world have been adopting a wide variety of mitigating measures, including an unprecedented diversity of legislation aimed at temporarily delaying or modifying certain contractual and legal obligations. And this is what we collectively could refer to as moratorium. And I would start by saying that moratorium is a legislative technique, a methodology. It literally means delay, as we probably are all familiar with. But when it comes to the laws, it generally refers to deliberate interventions by governmental authorities aimed at temporarily suspending, modifying, or forbearing the discharge of certain legal or contractual obligations. For that reason, a moratorium has the potential to interfere with the regular course of contractual agreements. In the very narrow context of financial agreements, which has been my area of practice, this generally refers to regulation that has the potential to delay the payments that one as lender would be expected to receive during the period of the moratorium. Historically, these measures have been used and have been put in effect as tools to protect specific sectors of the economy or specific classes of obligors that have been particularly hit by events external to their contractual relationships. What we're witnessing today is a moratorium regulation serving a variety of purposes to deal with, first, the immediate consequences of the emergency response, such as the consequences derived from curfews, from stay-at-home orders, from mandatory closure of businesses, and second, those measures to deal with the consequences stemming from the economic impact of the crisis, that follows the emergency response. Moratorium can act as a bridge. It serves as a bridge connecting the individuals and enterprises affected by the crisis response today to a point in the future where the crisis is under control. What it aims to achieve is to give support or give a framework that allows the largest majority of individuals that are being affected by this crisis to weather the storm, to make it through the storm, and to resume the normal performance of their obligations once the crisis is under control. It can take many different phases, the moratorium, and sometimes deferral is not necessary or advisable, but it could take the form of a temporary modification or relaxation of the rules that would be conducive to the end result of supporting a certain group or a certain economic sector. For instance, in regulated industries, some of the obligations of regulated institutions cannot be deferred, cannot be delayed, but they might benefit from an easing, a relaxation of certain of the duties, burdens, and obligations that they would have otherwise had to perform for the duration of the measure. And oftentimes we'll find references to those as regulatory relief measures, and they are implemented not only for the duration of the crisis, not to account not only for the difficulties in completing certain tasks, but for the important task of allowing institutions to also focus more resources on certain matters that become more urgent because of the crisis. And you will see examples if you go to the websites of the various regulatory agencies around the world. You will see how financial institutions or how companies that are issuing actively in capital markets may have received certain deferral on the submission of information. So financial statements can be submitted later than they should have. Certain forms that should have been filed may be filed later in time. Capital adequacy ratios for financial institutions may have to be relieved as well and relaxed momentarily to offset, to compensate the future loss of income or of cash flow that is transitory because of the effects of the pandemic, etc. So with that, I would like to move to the one thing that, the one piece of information that through the research in preparation for this conversation was more helpful to me, and is the fact that the moratorium legislation can be seen in two separate moments, in two separate, playing two different roles chronologically speaking. First, you can find moratorium regulation that accompanies the emergency response, the immediate response to the emergency that has to do with stay-at-home orders, curfews, and restrictions to the free movement of people and goods. What happens? Let's just take an example for this. Assume that we have a general stay-home order, and that as a consequence of this, in a country where, or in a state where this has been implemented strictly, you may find that courts and other adjudicating services, that notaries, that public registries, that other public administrations responsible for the granting of licenses, of permits, and authorizations, that they are either closed to the public or that their functions are reduced to the bare minimum to cope only with the most urgent matters. So individuals and enterprises' performance of certain duties, burdens, and obligations, as well as the exercise of rights and other powers, becomes impaired to the point in cases of material or physical impossibility. So when an authority is looking at developing or implementing a measure of stay-at-home order or other mitigating measures to respond to the health emergency, it would be helpful that the regulation addresses expressly these consequences, that the regulation incorporates references to what happens with those things that are time sensitive. And a failure to do that could potentially diminish the voluntary observance of the containment and social distancing measures. If you're an individual or an enterprise who fears that the performance of your obligations or the exercise of your rights might be affected if you fail to do that on time because of the containment measures, you might as well end up trying to perform obligations and going out to the public and trying to engage in activities that would counteract the effects of the social distancing. So if you really want to encourage people, you should make sure that they don't have the concern that by staying at home and by obeying your orders, they are going to suffer legal consequences in their contractual arrangements. And ultimately, and I think probably more importantly, a failure to address expressly the consequences of stay-at-home orders, curfews, and mandatory close of business, etc., could result in an abrupt increase of avoidable disputes that could rapidly flood the adjudication services, both public and private, resulting in unnecessary litigation costs and expenses, and have parties wasting valuable time and resources in dealing with litigation in a post-crisis environment when we should actually be dealing and facing reconstruction, how to rebuild the economy. And if we take this example a bit further, we would realize that most legal systems would recognize some form of defense or justification for a party's delay in the exercise of their rights or in the discharge of their obligations, whether it is force majeure, hardship, impossibility or impracticability, frustration of contract, government action, etc. And if that's the case, if most governments, most legislations would recognize some form of defense or exception of this nature, then the parties affected by the economic crisis or by the moratorium or by other regulations stemming directly or indirectly from our response to the emergency would likely have some degree of protection in courts. So it would make more sense to acknowledge that fact upfront with the regulation rather than having people have to litigate it and argue the defense in court, because you will have an unexpected volume of cases that will all be settled in the same way, because everybody should have been excused or everybody should have been exempted, at least those who were beneficiaries of the regulation. Accordingly, adopting strict social distancing measures, which is the initial response to the health emergency, would require that the relevant authority considers what happens to matters such as judicial and administrative proceedings. What should happen to the actions and to the filings that the different parties in a proceeding need to make for the duration of the containment measures? What happens to precautionary measures that were granted and are up for termination or renewal during the period of containment? What happens to permits, to licenses and authorizations that were supposed to be extended, that are expiring, or were supposed to be granted during that period? What happens to migratory status of individuals who are in the middle of a migratory process? What happens to the importation and nationalization of certain goods, etc.? So I'm just listing here things that a number of countries around the world have realized and have had to regulate for, that are areas that become immediately affected by strict social distancing, strict containment measures being adopted and implemented. These are matters that just need to be addressed as a pure consequence of these measures, and they are unrelated to the economic impact of the crisis. This is just a matter of fact. If things are closed, how do I exercise my rights? If things are closed, how do I demonstrate that I satisfied performance, or can I excuse myself from performance? These matters can be addressed via express moratorium regulation that extends any accruing periods, whether it is a procedural period or a time to exercise a right, extending it to a point in time after the crisis has ceased, or at least after the measures are lifted. It can also be addressed by private parties in their transactions by general extensions of deadlines. And we've seen this more typically in business to consumer transactions. As an example, you can find some airlines relaxing the regulation or their policies on cancellation or on the modification of reservations, waiving certain fees, etc., just to ease their coping with the influx of requests from their clients. And then moving on to the moratorium and other specific measures to cope with the economic impacts of COVID-19. We'll spend less time on this section, as some of the ideas that we've discussed so far are equally applicable. But I think what the big takeaway that I want you to go with from this presentation is, when designing a strategy to cope with both the emergency response or the economic crisis that follows the emergency response, it is critical that any measures adopted are taken with due regard to their interaction, to the interaction of the mitigating measure with the pre-existing legal framework. And what I mean by that is, adopting moratorium regulation has consequences. When you defer payment obligations, when you defer the satisfaction of contractual obligations or of legal obligations, something else will have to give, because that is a certain cash flow that is not coming to a party that legitimately expected that cash flow on the date that they expected. So when you design moratorium regulation, you need to think of on the two sides of the equation. You need to think on the party you're trying to protect and benefit with the measure, but you also should think about the consequences, the economic consequences for the creditor or the party that will be affected by the measure. For example, if you are considering a moratorium on a low-income residential mortgages, so that families and individuals who are having a hard time to honor their payments timely can have some relief for a certain period of time, you should consider that that will affect the cash flow and the value of the portfolio of those financial institutions that were financing these transactions. So for a period of time, the financial institution that has extended that mortgage will have to deal with larger non-performing portfolio, theoretically, with depending on the size of this portfolio, it might affect the capital adequacy of that financial institution. So you're looking at a bank that by regulation might be required to contribute additional capital, to increase provisioning, or to increase the legal reserves that they hold with the regulator to continue maintaining their license. So you may need to devise a strategy whereby you are extending the protection to the sector of the economy you are trying to protect. For instance, in that example, mortgage debtors, residential mortgage debtors, but you would simultaneously have to deal with what happens with financial institutions that are heavily affected by the measure. For example, if you have an institution that is solely devoted to low-income residential mortgages, they will be probably severely impacted. So you would need to have checks and balances. You would need to have a response that addresses now the consequences that the bank will suffer as a consequence of the measure. And this is why we see a tremendous amount of intervention by different governments, whether it is by repurchasing these types of portfolio from financial institutions, or offering guarantees, or offering liquidity facilities to support financial institutions that might be directly affected by a moratorium of this nature. You would also see small and medium enterprises struggling to keep honoring their payments, and then to the extent that you grant moratorium to those, again, if you have institutions with very large portfolios of small and medium enterprise businesses, they would be hit harder than others in the market. So the design of response to the economic crisis will have to necessarily pass through the analysis of the different interactions of the measure that you're proposing with all the actors in the market that may be affected. And in general, when it comes to the response to the economic crisis, not so much to the emergency response, you will see moratorium regulations focusing on what happens with the accrual of late fees, what happens with liquidated damages, what happens to fines, to monetary compensations for breaches of performance, what happens to ordinary interest, etc. And what they are trying to do with this is to minimize the impact on both sides of the equation, on the debtor and the creditor. Finally, to start wrapping up the points that I wanted to share today, a few general comments on classical features of a moratorium regulation. It would generally be limited in duration. You would expect to see that the moratorium has a specific termination date and that it provides for what needs to happen for that date to be extended. They tend to have narrow sectoral scope, and the interpretation of measures on a moratorium regulation, I submit to you, should be done on a restrictive basis. The interpretation of this, the application of these measures should be restrictive because of their very nature and because of the impact that these type of measures have on the life of contractual agreements and contractual relationships. And finally, and this is something that I have seen more often than not, the responses tend to be very, very focused by sector, and within that sector, very focused on individuals who are actually being affected by the crisis, so that we don't have to stop the wheel of the entire system. The idea here is that the intervention really benefits those who are immediately or imminently affected by the crisis, and not to all individuals in the same class. There will be mortgage, for instance, in the example of mortgages, there will be mortgage debtors in a low income setting that will continue to honor their mortgages because they continue to have the cash flow and they choose to do so. So the moratorium is not, and it doesn't have to be an imposition on both sides. It should be devised as a mechanism to offer protection to those who are actually suffering the consequences. Acknowledging the fungibility of money helps when it comes to understanding how you can compensate, how you can offset the consequences of measures, so that if the creditor is suffering the consequence of a moratorium regulation on one hand, that the regulator or that the system is offsetting that impact elsewhere, for instance, by deferring payment of taxes, or by offering some tax break, or by easing social contributions that the employer would have to have made during that period, etc. And finally, to close on this, I again want to reiterate my invitation to those of you interested in the topic. There is a vast amount of literature and of information available. I would start any research on the topic by going to the sources of development financial institutions such as the World Bank, the Inter-American Development Bank, and others who are doing an excellent job at compiling information and systematizing it to start your research, and to also have ease of access to the actual pieces of information. I think the advantage of going to these sources is that they are generally perceived as honest brokers, and DFIs in general tend to have a very a protagonic role throughout this type of crisis. DFIs are counter-cyclical entities by nature, and their role is of the utmost importance when it comes to the response to a crisis like the one we're living. So I do urge you, if you're interested in the topic, to check those resources, and also to pay attention to any available technical assistance resources that these institutions may be offering to your country, to the agencies in your country, if that's what interests you. And with that, Carlos, I give it back to you, and many thanks again.
Thank you very much, Tadeo. This is a very interesting topic, and I see that it has so many branches or in footnotes that I'm pretty sure that there's going to be a lot of interest in it, and we're going to perhaps receive lots of questions. So perhaps as a follow-up, I would like to ask you, perhaps you could share some of these sources that you have mentioned.
Absolutely.
From the World Bank, the Inter-American Development Bank, or some other regional banks that have compiled these regulations throughout the countries, that they work with, so our audience can access them. That will be amazing. From my part, if I receive any questions, I'll share them with you if you don't mind.
Absolutely. And one thing, and it's a closing remark, these are my personal views and opinions, but frankly, the DFIs have done a tremendous job. I'm very impressed with the amount of information that is available out there, and I personally strongly recommend people to use them as references. It's not because I work there, but truly it's an objective basis of information, and it's just so much going on that it's better to start in a place where things are already systematized and synthesized. No? But thanks a lot, and yes, I'll be available to answer any questions.
No, thank you very much, Tadeo. Hopefully there's going to be a part 2. We'll see if that's possible. But Tadeo has been wonderful. He's a regular speaker at the ILI. He teaches on so many different topics, including negotiations, contracts, and so on. So I'm very happy that he was able to join us this time around. Hopefully we'll see you again soon.
I hope so.
With that, I want to also thank the audience. I hope this was interesting and helpful to you. I'm sure that there's going to be some more questions. If you have them, please send them to us, and we'll be happy to hear from you. And hopefully, we'll be able to share more of this information to you. With that, again, thanks everyone, and hope to see you again soon. Bye-bye.